Not entirely unexpected. Last day of the year, volumes low, the market right where the congestion zone is, and it's again making heavy meal of that. But no harm done, still around 10,870 on the Nifty. This is Closing Bell. I'm Anuj and with me Surabhi. Hi Surabhi, good afternoon.
Good afternoon, Anuj. So some 16,000 crores of cash market turnover. There's still some people in the trading rooms. It's not all curtains down just yet. But, today's day and in the morning you were making this point. I guess that's been the story last couple of weeks, right? While the market has nicely managed to bounce from the lows, the question is whether it has the triggers, the momentum, the firepower, the money power, and whether we'll see that in January, whether this 11,000 mark will indeed be conquered.
Yeah, either you can preempt that, Surabhi, because if that happens, you'll have a big move, obviously, because this has been a big problem point for the market. And if one big wall is taken out, then you see a big rally. So either you can preempt that or you can wait for that to be taken out, because if, this is the 8th time that, you've gone there and slipped a bit, not too much, but it depends entirely on the way you want to approach it. You want to preempt it and participate in it, good for you, it may work. The only thing is that, of course, your stop loss would be somewhere around 10,550, the low of 26, or you could be one of those who wants to wait and see if this indeed is the time in which this is taken out. Today, as you said, the volumes are also on the lower side. Tomorrow it's going to be even lower. Of course, tomorrow is will be the only market which is still trading. So let's see how things move from here. But the Midcap party is intact. The advanced decline still holding on. At no point have decliners overtaken advances. Even when the market slipped into the red intraday, the advanced decline has always remained. For look at that line. I think this is a healthy line. It's not 5:1, 6:1. It's right about where it should be, 3:2. Your stock selection becomes important. You've seen all through the year it's been about stock selection. 2017 was about just random. Buy any stock, 3 days later you made a lot of money and you feel good about yourself. 2018 has been different. In that sense, it's ending right how it's been. Choppy, a bit in the range, and sort of stock selection being the key, and I think that's good omen for the market.
Yeah, well, today it's a day of the PSU theme. A lot of the government-owned enterprises, those stocks have been running very hard. Whether it is something like a Dredging or an STC, ITDC, you name it. Well, we'll be analyzing some of these trends as we go along. Here's what's lined up on Closing Bell today. The last 1 hour of trade of 2018. Metal stocks like JSW Steel, Tata Steel, Vedanta and Hindalco have been rallying on hopes of progress in US-China trade talks. HDFC, RIL and HUL are the key drags of the day. We would be discussing a lot of these trends with the fundamental experts. SP Tulsian of sptulsian.com, Kunj Bansal, partner and CIO at Sarthi Group, as well as Mayuresh Joshi of Angel Broking. 2018 is done. Now, which are the sectors and stocks one can look at in 2019? What's the house call at Tata Mutual Fund? We ask Rupesh Patel, who is our alpha manager of the day. Now, of course, it's been a rollercoaster ride over the last 12 months for Indian equities. What is in store in 2019? What should your portfolio stance be? Saurabh Mukherjee, founder of Marcellus Investment Managers, joins us on the show. And of course, as always, trading calls and ideas for the last hour of the year, coming up with Ashwini Gujral and Mitesh Thakkar.
Okay, so how should you position yourself for the last hour of this trading year? Ashwini Gujral and Mitesh Thakkar now join us with closing strategies. Good afternoon. Ashwini, your thoughts first for last hour. How do you approach the market and what would be your stock calls?
See, my sense is that, the Nifty premium is almost 56 points. The Bank Nifty premium is 160 points. If people are booking profits or going short, then the premium cannot rise. My sense is possibly the bears at 11,000 are beginning to cover a bit. Maybe they have a sense of, what's coming. So I would think the last hour should see a bit of short covering because all day they tried to hammer it down, but they've not really been successful. No bull will get scared by a 20-30 point down move. So I have my long positions on Bank Nifty intact. In fact, you have now a decent stop, 10,800 thereabouts, and anybody who wants to play for 11,000 can now buy and look towards another expansion which happens on the upside. The whole point here is that the trend has been strengthening and maybe the market is moving towards a bit of a trending, kind of frame of mind, because otherwise mid-caps would have collapsed, or things would have been much poorer nearer to the 11,000 mark than it has been. Now that's a call for each person to take, but I think the bigger trade will now be the crossing of 11,000 rather than the pullback from 11,000. Having said that, banks have come back. I think Kotak is seeing a lot of short covering. That's a buy with a stop of 1235, target of 1280. IndusInd Bank is a buy with a stop of 1580, target of 1630. And Bank of Baroda is a buy with a stop of 117, target of 125.
Okay, so plenty of buy ideas on Ashwini's list. He's looking at a crossover beyond 11,000. Perhaps that's what the new year is going to bring us. Mitesh, good afternoon. Which way are you placing your bets for the last hour of trade for this year?
Yeah, good afternoon. So I think staying long does make sense. I think, we've seen time and again 10,940, 970 zone kind of push the market down, but this time it doesn't look like very strong. Plus, there's a chance of expansion on the upside. So I would agree with Ashwini. I think clearly maintain your long positions, long biases. I think maybe in the next 1-2 sessions we might be able to get past 10,950, 970, and once that happens, 11,080, 11,100 range could be inside. So in that sense, we'll trade with more of long bias. I have two buy calls, in fact. The first one is a buy call on Container Corporation with a stop at 674 for targets of 720. Disclaimer that it's a recommendation, plus I personally have futures positions. And Steel Authority amongst the metals name. And in fact, the entire metal pack is looking interesting. SAIL is a buy with a stop at 54.80, and I would look at targets close to about 60.
Okay, by the way, the stock that's batting for bulls now is Kotak Mahindra Bank. Just pull out that stock. Of course, this is the last day in which, the sort of deadline. And look at that move. I don't know if the market wants to price in something here, but in the morning it was one of the top losers, and now it's among the top gainers. So that's one stock which is seeing a bit of a price and volume breakout right now. So just keep an eye on that one. SP Tulsian of sptulsian.com and Kunj Bansal, partner and CIO at Sarthi Group, now join us. Good afternoon. Mr. Tulsian, your thoughts first on Kotak, since that is now the stock of the moment, and perhaps a lot of discussion on what's the way forward here.
See, Anuj, I think taking call on Kotak, there was no risk seen in holding it, because it was expected that probably Uday Kotak is smart enough in taking the call and taking care of his investors and protecting his interest also. But whether to expect that maybe post-market hours, you will see some kind of announcements in respect to the equity reduction or the promoter stake reduction, I don't know whether that will happen, or that may be a wishful thinking. And if it happens, that will really be on a very positive line, whatever modalities are being released by the company. But I am not by the promoter, not by the company. But I am not banking on that, but taking a fundamental call. We have been saying this, in fact, for the last 2-3 months since the controversy having erupted, whether it will be negative for the bank if they don't reduce the stake. Even if they don't reduce the stake, the things are not seen to be so severe. The branch expansion, I don't think that bank is too interested in going for the branch expansion. I don't know, the freezing of the CEO or maybe the MD remuneration will again be a very material thing. So taking all this into consideration, the only guess one can draw that whether the announcements will come post-market hour today evening or not.
Okay, there's some excitement there. What Lata was telling us was that the Reserve Bank of India is well within its rights to issue a penalty if it so deems fit, because the deadline is lapsing, and if there's no statement from Kotak Mahindra Bank, which hasn't come in so far, then technically there is a sort of a breach of the regulatory requirements. And if the Reserve Bank wants to penalize Kotak Mahindra Bank, then perhaps something comes. So we don't know. This is all within the realm of speculation right now.
I can tell you something. Uday Kotak will happily pay the penalty. Having to cut down stake 10%. 30%
to 20%.
Yeah, and paying a penalty. I think I know which option he'll choose, but anyway, let's see.
No, I take your point, but I think it won't be as simple as that. That will just be an interim penalty if it comes through. But anyway, the last word on this debate hasn't really been said, and that's a stock that is on the move. Mr. Tulsian, my next question to you is on the December laggard. Stock has done well this year, Reliance Industries, but it's struggled throughout in the month of December, including today. What would your advice be for people who are looking at RIL in 2019?
See, Surabhi, I don't think that that's an ideal way of taking a call on the Reliance Industries for 1 month behavior. But at least, for 2019, if you really want to play on one or maybe 4 or 5 stocks, which are seen to be quite safe, which I have been saying this, like HDFC, one can add the Reliance Industries also in the same category. Because if you really see the situation on their two new generation projects, that is Reliance Retail and Reliance Geos, are going to perform quite well for calendar year 2019. And that will keep reflecting into the share price also, moving up further. Because their core businesses seem to be quite good. I'm not too much disappointed even if the GRM falls by about half a barrel, maybe because of the softness in the crude prices and all that. But maybe the spread can increase either on the on the gasoline or on the diesel, and that is going to be seen quite positive. Overall, keep a positive view from a portfolio point of view. And in the morning also I have said that for first 4 or 5 months you need to have the safe stocks in your portfolio where you have the least risk of shares going down, and probably Reliance Industries falls in that category. So I won't be too perturbed taking 1 month call of the price behavior, what we have seen for Reliance Industries in the month of December.
Okay, stocks making a move. Colgate, what a dream move it's been for Colgate really. Just keeps making new highs. 1330 now, 1337 on the stock. Britannia also. Britannia, of course, is some distance from its highs. That's a stock which has corrected quite a bit. But that one also is seeing a bit of a move right now. 3108 is what you have on Britannia. Kunj Bansal is also with us. Kunj, hi, good afternoon. Your thoughts on some of these FMCG names and the big move that some of these stocks are making?
Yeah, so 2-3 things are happening. One, of course, the market is slowly and gradually shifting towards the safe stocks. As we all know that in 2019, one of the biggest event is the general elections. And ahead of elections, we have done some data digging, and what we found out that in the election years, and specifically those election years in which government changes, the major impact of the government policy changes come on the investment oriented sector, which is obvious also, such as roads, highways, power, port, oil, etc. What doesn't get affected by the government change is clearly the consumption space, whether it is durables, whether it is consumer goods, whether it is paints and all such other items, white goods, kitchen appliances, electronic appliances. And I think that is where slowly the market, the money in the market is shifting to take a more defensive approach. Of course, the results for last 2-3 quarters for these sectors have been good and are likely to continue to good. So from a single digit earnings and volume growth, these companies are starting to move towards close to low end of double digit growth. And that is where we are seeing that happening. Valuations, of course, continue to remain a challenge, but in some of the cases on a relative basis, they are lower compared to the highs that they had touched. In some cases, they have come close to the highs. So I think this is what is clearly happening. In fact, within the broader consumption space, if we specifically talk of paints, that is one sector which is clearly the beneficiary of almost 35-40% fall in the oil price that we have seen in the last 2 years. And that's where we have seen the stock prices of oil, paint companies sharply moving up.
Okay. By the way, as we were mentioning earlier, today is a really great day for PSU stocks. Maybe it's a thin volume trade that's simply playing out, but whatever you see on the screen, Hindustan Copper, STC, Dredging Corporation, I mean, this entire list, SJVN, stocks that never move, all of them are getting really excited today. Mr. Tulsian, is there any trigger immediately that comes to mind? I mean, I don't know if sudden major disinvestment announcements can come or something can happen in the last minute, but would you advise doing anything with PSU stocks at the moment?
See, Surabhi, I think in case of Dredging Corporation, CCEA committee, Cabinet Committee on Economic Affairs have already approved the stake sale of 100% stake sale held by the government, which is, I think, to the extent of about 73-74%. But they have also, decided to sell it to the 4 PSU, that is Kandla Port Trust, Jain PT and Paradeep and maybe Visakhapatnam, if I'm not wrong. So I don't know what kind of excitement is seen, because that can only eventually see the divestment target being met. And in fact, if you really take a call on market cap of Dredging I think it is seen to be quite low, 1500 crore. And if you divest 75% also of that, and whether that will trigger the open offer, I don't know. Because probably they may get the exemption, again going by the precedents. So taking all this into consideration, I don't think that there is any kind of justification. If yes, some private party, some strategic investor from private sector would have come in Dredging Corporation, that would have seemed quite good. But it is just change of the guard from Government of India to these 4 PSUs ports. I don't know whether that will really change the equation. So I will caution the investors to remain away from buying the stock. And those who are holding it can, look to book the profits as well in today's rally.
Caution taken with both hands, Mr. Tulsian, absolutely, because we haven't in recent history seen a real stake sale of a government entity to a private entity where there's fresh money coming in the government's kitty. It's more or less accounting jugglery moving from one government entity to another. That seems to be the case in dredging as well. Just about 14-15 points higher on the Nifty. That is how things are playing out. Profit taking on a couple of the oil marketing companies, by the way, HPCL, even IOC for that matter. Some of these stocks are towards the lows of the day. BPCL also just mildly negative as we speak. Let's get some more trades in then. Sandeep Wagle is joining us. Sandeep, last couple of minutes of 2018, what are you trading?
Afternoon, Surabhi. I would go with a buy in a DHFL, stop loss of 246, target of 261, and a buy in a Chennai Petro, stop loss 294, target 306.
Okay, Sandeep, thanks a lot for those trading ideas. Have a good year, and of course, we'll talk to you next year now. Just talking about some more names. Surabhi mentioned, of course, oil marketing companies. IOC is making lows of the day. That is quite interesting. A couple of these ADAG group stocks have turned. Intraday, if you see Reliance Power, Reliance Communications, these stocks are now making lows of the day. While on the other hand, of course, metals still continue to do well. JSPL, JSW Steel, both at the high point of the day. Motherson Sumi is the other stock which is making a bit of a move. So that one through the day has been very strong and is looking up once again. So let's see how that stock does from here. But that's doing rather okay. And of course, PFC and REC have done well through this month, and that seems to be having a good home run. Mr. Tulsian, I don't know if you looked at Chennai Petro of late. Decent move in the stock. Your thoughts?
See, Anuj, maybe just could be the some kind of buying scene coming back after having such a big destruction in the value. But Chennai Petro, I think should be seen more from the GRM point of view, and I don't think that the things are seen to be better, and even there may be some kind of inventory loss also. So I'm sometimes unable to correlate the kind of rise also, which could only be attributed because of the value buying scene coming in after stock having corrected so much.
Okay. By the way, Oberoi Realty is down about 2%, and a much smaller stock. Peninsula is only now 11-12 rupees stock, but even that's lower. Let's pull up Sunteck Realty, a couple of other of these Mumbai-based construction companies. We'll just have them, or real estate companies, we'll have them coming up. Kunj, I don't know, are you at all interested in real estate? Because for Mumbai specifically, there is a relaxation in the CRZ rules that came through higher FSI. But I don't know if balance sheets are strong enough and whether these stocks are on your radar for 2019.
So to answer your question first, for 2019, doesn't look like that's going to be a great year for us. In fact, just to put some historical perspective, 2017 was a very great year for the real estate stocks, and which was quite surprising that despite the demonetization impact which happened in November 16, almost all the real estate stocks did well. Over and above the demonetization, they were also affected by the RERA implementation, but despite that they did well. The whole outperformance reversed in 2018, and in fact if we look at the real estate index for 2018, I don't exactly remember, but it's down some 30 odd percent. So that's a sharp underperformance. I think the similar kind of underperformance will continue in 2019 as well. Given the way once one checks in the market by talking to the companies, talking to the lot of suppliers of real estate companies like tiles manufacturer, ceramics manufacturer, and all these companies, doesn't get a feel that the construction is picking up, that the sales are picking up. They have stopped going down. So the sales have bottomed out, but they have not started going up. So I think it's going to be a challenging time for real estate companies, though the balance sheet for some of the players, especially 2-3 of the Mumbai-based players are quite strong. So that's a big support.
Okay, fair enough. Mr. Tulsian, is it time to book profit in, say, names like Bank of India or Intel Bank of Commerce after the big run that we've seen over the last fortnight?
See, Anuj, profit booking is always advised in this market, but if you want to keep both the stocks, because Bank of India probably may see capital infusion of about 10,000 crore maybe in the next 2-3 days, and that can make the stocks to move to a level of about 110. Similar could be the case with OBC also, because the things are seen to be little positive for the PSU banks.
Okay, Mr. Tulsian, so as we let you go, final question for this year then. And for the benefit of those who missed your morning call, you did name a couple of the large cap stocks that you will keep in your portfolio. Mid caps are you most optimistic on for 2019?
See, Surabhi, I've already given 4-5 names in the morning, but if I just want to, maybe the morning stocks which I've given in the morning are two from the pharma space, that is Aurobindo and Biocon. But two stocks, one could be from the private sector bank, that is IDFC Bank, and one could be from the real estate and paper, could be Century Textile.
Okay. All right, Mr. Tulsian, we'll then wrap it up on that note for this year. Thank you very much for being with us on Closing Bell, and we will see you on the 1st of January in 2019. That is just tomorrow. Well, that's Mr. Tulsian's call on a couple of stocks. Markets absolutely flat, not doing much. Mid-caps are still holding on to gains, however, Anuj. I guess if that's one positive takeaway from today, is that broader market seems to be still in a good mood.
See, the broader market will outperform as long as the market senses that it's not going to collapse. The
headline indices,
headline index. You go through these phases when headline index gets into a zone which it's unable to take out. In this case, 10,900 to 10,1100. I think it's a well-documented resistance, and today is going to be 8th time when the market would have failed to take that out. But the market is strong and it's outperforming the global market, and in that environment, mid-caps will do well, especially in the context that 2018 was a rather rough year for mid-caps.
Right.
And actually, the mid-caps have sort of seen a big reversal from the day of the election result outcome. The mid-cap rally is back. Whether it's back for real, we'll find out. But this, you can't dismiss this mid-cap rally as just short-term. This is genuine delivery buying, Surabhi, that you've seen in a lot of names. Just look at that chart. It smacks of something. But all bets are off if, globally there's a big bear market and things start to turn. And that's the risk that you'll have in the stock markets, of course.
Well, we'll see how that plays out as volumes and fund managers return full-fledged, that is, in the first week of January. Right now, it's time to get a conversation going with our alpha manager of the day, Rupesh Patel, who manages money at Tata Mutual Fund, is now joining in. Rupesh, thanks for joining in. Season's greetings to you. And let me start by wishing you a happy new year in advance. Now, the question is, next year, is it going to be more of the same, more money going into large cap stocks, or do you think mid caps will come back and what we saw, the flare of 2017, that will find its way again in 2019?
Sure. I think if we look at 2018, it was a very volatile, challenging year for investors because we started the year with a bang. But later on, with crude oil prices going up, US interest rates continuing to go up, and US dollar strengthening, not only India but entire emerging market pack suffered. And India, more because India is a significant importer of crude oil prices, there were concerns on current account deficit, on currency, and to some extent on inflation, leading to concerns around interest rate cycle as well. So from that point today, if we look at the macro situation, most of the concerns which were there a few months back, they have significantly eased, whether it's around current account deficit, whether it's around inflation or interest rates. So I think from that perspective, we are relatively better placed as compared to what we were about a few months back. At the same time, I think from global perspective, as far as US interest rates are concerned, no doubt there is maybe one or two more increases may come in near future. But I think we are more or less closer towards the end of the cycle. And that should also to some extent provide some kind of a breather to emerging markets, including India. If we look at the domestic story, no doubt banking as a sector, it is coming out of that NPA cycle wherein we believe that a large part of recognition, as far as NPAs are concerned, is done. And credit costs should normalize going ahead very sharply, and this should be a big driver for earnings growth going ahead. Capacity utilization levels are moving up. Both these things augur well for earnings growth going ahead, and hence I would maintain constructive view on the markets going into 2019.
Rupesh, hi, good afternoon. If that is the case, some of it is already played out, money moving from exporters into domestic stocks. Do you think that could be the theme for the next quarter or the next year perhaps?
Sure, I think some of the rally which we saw in exporters as being direct beneficiaries of currency depreciation, that part has already played out, and some of that has reversed also with currency depreciation also halting and in fact rupee appreciating to some extent. So I think that currency related part on exporters, as far as that is concerned, that seems to have played out more or less. You are right.
Okay. Rupesh, there's a big debate out there about revival of capex and whether cyclicals are going to be a big theme to look at in 2019. Are you in that camp? Would you look at cyclicals, and if yes, then what part of this pie?
Yeah, sure. Actually, we also believe that we are probably, you look at from top-down perspective, corporate profits as a percentage of GDP or capacity utilization levels across sectors, it comes out very clearly that we have some, we are into a phase wherein some kind of cyclical recovery can be expected. We have seen meaningful uptick in government sector capex in last few years. And as this capex continues momentum, private sector capex should also eventually pick up, leading to support to the cyclicals. One big way to play cyclicals is through corporate lenders. I think not only they gain from the pickup in credit growth, but also the fact that cyclical NPA cycle getting over would be a big boost for their earnings, for their return on asset ratios, for their return on equity, and they can be a big proxy to play a cyclical revival.
Okay, but just looking at some of your holdings, the consumer non-durable and a couple of other sectors look quite interesting. Your thoughts on overall space here, consumer non-durables, whether there are still enough stocks that you can buy at current valuations?
No doubt, if we look at consumer as a category, valuations are certainly not cheap, particularly based on near-term earnings. But the way I look at consumer basket is that India is a young country. More than half of our population being below 25 years of age. That means the runway for growth available for many consumer companies segments is huge, and it's not a 1 or 2 year story. I think it's a multi-decadal story. There would be phases wherein market would move significantly ahead of fundamentals, and we may see some time or price corrections. But I think if one is willing to live through that volatility, then consumer sector in India offers a great opportunity. Now within that, you can look at staples within consumer discretionary. It's a very wide basket. You can have QSR plays, you can have building product plays over there, you can have electronic durables companies over there. So multiple ways to play that. I think depending on valuation, depending on your comfort on the management quality of balance sheet and the brands which some of these companies have, you can construct a pretty decent portfolio out of this.
Okay, so that's consumer. What about the four-letter word NBFCs? Really, the acronym of 2018 perhaps. Rupesh, for instance, are you still comfortable holding housing finance companies? Or are you steering clear? Are you only looking at consumer finance plays maybe?
So on NBFCs, no doubt the events which happened in recent months, that has led to some kind of dislocation in the market. On one hand, you have NBFCs which are backed by good corporates, I think as far as liquidity is concerned, those NBFCs will not have any problems even going ahead. On the other hand, NBFCs which are operating in a niche, which have conservative credit practices and which have been through cycles, I think they are the ones where I would still be comfortable holding on to. As far as housing finance companies are concerned, I do not have a very significant overweight position in any of my portfolios on that.
Rupesh, but as a fund manager, how do you, in the morning we were having this chat with Nilesha as well. It's well documented that election result, while it changes the near-term move of the market, it does absolutely nothing in the medium to long term. But there is a lot of volatility around that time, and obviously it impacts portfolios. So, how to approach the big one now, 2019 May elections, and how are you mapping that as a risk factor?
So I would agree with the conclusion that as far as election results are concerned, markets, I mean, they do get impacted maybe for a day, maybe for a few days, weeks or months. But eventually it's the fundamental of economy, fundamentals of the businesses which are there in the portfolio that matters. Honestly, and these events, I mean, are very difficult to predict one way or the other. So I think I would, we would take it as we move ahead, going ahead. I mean, would not be really keeping into mind election outcomes, making significant changes to my portfolio.